Now it says broadcast is live.
Right. I don't see the. View on YouTube. Here it is.
I'm telling you, these.
I have the link. I have the link.
Okay, I was gonna say these little things about like producing this stuff are surprisingly annoying.
So I guess we can post this link. I can give you the link. You can post it to.
Yeah, I'll post it in a couple of channels.
Yeah, and then let's see. I can post it on. I'll post it on Leverage. You can post it in other places.
All right. And so it records from the beginning, right?
It does. It's already been recording for a couple of minutes. So yeah.
Well, I mean, we could just edit it when it's posted.
Right.
The guy that used to do the YouTube stuff for Wavepool was doing that.
All right. So let's just start with the general, so what do you think of the market situation? Is it, is it going strong? Is it?
Yeah, I'm incredibly bullish. I don't think this is some kind of repeat of 2017 at all. I'm super bullish on Bitcoin, on ETH, on anything to do with like layer two solutions for scalability and anything, even alternative layer ones, where people like it just shows that the demand in general in the space is so high, and that people are willing to just experiment with all kinds of stuff. So I'm bullish on everything crypto right now.
Right. And there's a few things that make me agree with you on the concept that this is not the same as 2017. One is that 2017 it was still highly experimental. It was still considered, borderline illegal. There was all this China FUD. Just the amount of uncertainty and the readiness, or people, they were sitting on like a ledge and just waiting to jump off, thinking that the whole thing is gonna crash. So when when the price doubled from something almost 10,000, just over 10,000 to 20,000 in like I think 3 days or something like this, yeah, everyone sold. It was an obvious move. But now what has happened is it is such a big market. Corporates are in, Michael Saylor and Elon Musk are buying, billions. So that is essentially creating like a, it's not the right word, but it's creating a kind of gravitas on this whole space. It's just like when governments hold gold, the value of gold increases because of the stability of a lot of gold being locked up more than anything else. So I think that is happening to, you start seeing it with Bitcoin, but Bitcoin again, Bitcoin cannot do everything, right? So you need solutions for scaling, which, as you said, these alternate layer ones, layer twos, and of course the whole smart contract thing, which is just showing possibility after possibility, right?
Yeah, and so on the institutional thing, I mean, you remember back in the day, like that was a meme that we would say quite often, even going back to like 2013, 14, 15, like the institutions are coming, they're going to come and rescue the crypto markets. They're going to pump us to amazing new heights. But it never really happened. Like there was different desks got like involved. There would be some banks that would set up a crypto desk, or some of the big Chicago trading firms would get a little bit involved. They would dip their feet in, but we never, until really last year, had a true institutional like inflow that was clearly not crypto native. So like guys like Paul Tudor Jones. I mean, the CME Bitcoin contracts have been around for a few years already, but and then that's the main vehicle that Paul Tudor Jones is using, and these guys are basically using the meme of put in if you want to have a diversified portfolio, you need to have 1 or 2%, low single-digit percent of your portfolio should be in Bitcoin, which I think is a great way to spread the like crypto fever, because it just gets people. First of all, if people follow that, they're not taking too much risk. So if things do get bearish, they're not suddenly totally wrecked. And also, it's just smart in terms of like this, modern portfolio theory, where you're supposed to diversify and take different levels of risk to get different returns. So if you're going to put some percentage of your portfolio in stocks, bonds, gold, whatever, then you should also consider putting a sliver into Bitcoin, which I think makes complete sense. But then what really surprised me, so that was something that I always thought would sort of eventually happen, that this kind of meme could take over. But the corporates buying, like that institutional aspect was something that really has surprised me. Just Michael Saylor, Elon Musk, you mentioned, and others that are just pouring in billions and billions of dollars, and they're in it for the long term. They're not flipping. They're doing it to diversify away from fiat, and they're just buying tons, usually off of Coinbase, OTC. They're just buying tons of coin off the market and then storing it. So this has led to different dynamics in the market. Like we've still had some pullbacks since we've broken all-time highs and gotten up to 60K, but we're not like having this panic, quick drop 50% and this kind of like insane price action in this way. It's actually been like a nice sort of staircase up, really nice and slow, maintaining solid levels. It's been really a really healthy and gradual move up. When you compare it actually to late 2017, it looks much more controlled, much more healthy and sustainable increase, in my opinion.
Right, and 2017 was a blow-off top. It was like a climax top, and it's just overextended. It's hyperextension, right? When a trend hyperextends, it essentially soaks up all the buys all the way up, and on the way down, there's no more buys because it's all been bought, and it leads to a long, very steep and protracted retrace, which is essentially what we had a 3-year bear market. As we see, recently, every move is a very strong move. When it breaks above the previous high, it's a nice, strong, solid bar, and the retrace is deep, which is actually good. It's not a crash, but it's just a nice deep retrace, which means more people will see the price as more reasonable, and they're likely to enter, right? So I'm actually more afraid of price just hyperextending, right? And that is more dangerous in the sense you can have a protracted bear market. So what do you think of this other? So for me, Bitcoin is sound money. I get that, but I think the key differentiator for this market is that you have assets that do not exist in the traditional market, right? So you could always say that, I'm going to buy some alternative to crypto in the fiat markets. I'm going to buy, gold or some index funds or something like this. But there are certain assets that do not exist, right, in the regular markets, like your favorite NFTs. What do you think of NFTs?
Yeah, I mean, so obviously crypto I guess we can call crypto like a separate asset class, right? And within that, there's, obviously Bitcoin, and then you have like the smart contract the layer ones like Ethereum, and then within that you have sort of like a subsector in the crypto asset class of DeFi related things, where you can do a lot of the things you can do in like normal financial markets, like borrowing and lending, margin trading, um, different sources of getting yield in the markets. And then you got this NFT business. And I guess the interesting thing about NFTs is how many skeptics there are, despite the fact that there's clearly value in the market. Like we see these, $5-10 million prints on trades for these crypto punks. We see the $69 million people collage in the Christie's auction. But still, you see people saying like, "Oh, this is all just a money laundering scheme," and "Oh, this is just wash trading. This isn't actual economic activity." And when I see people say that, I just feel like, I mean, first of all, I can relate to that because I've seen things that I don't believe in, and I, hate, or I'm just bearish on, and I see them go up in price. You're in disbelief, right? You start sort of arguing with yourself, but you're doing it externally as well to people. When you're just saying like, "No, this can't be," you're just in denial, right? So I can relate to that, but I've over the years as a trader learned to control that emotion and to harness it and to understand when there is a trend going on, and that you should not try to fight it but follow it, which seems very simple, but it's actually, it really requires a lot of controlling emotions. And so when it comes to NFTs, I find it very difficult sometimes to understand how the hell things are selling for millions of dollars when often these things aren't even stored on chain, right? All it's doing with some of these NFTs, the ones using like on Ethereum, you're not storing the JPEG bytes on there, right? You're just storing a hash to a IPFS file, which is even less compelling, or even less compelling than that, a URL where you can just open the URL from, like, that data is stored on chain. You would think, at least if it's some pixelated CryptoPunk, that you store, like, you could do like a base 64 encoding, right, of the JPEG file, and store that that string in the chain, and then at least in some way it's actually stored. But you can't really do that. That's not really, I guess, what blockchains are good at doing.
Yeah, I think you can. Yeah. It's just cheaper. Like if you're using Ethereum or something, it's going to be very expensive. So on a cheaper blockchain, you can definitely store the entire JPEG, or even a small movie file or something like that. But yeah, they are just trying to save gas, and they are just storing a IPFS, like essentially a descriptor where.
Yeah, but then then of course, I mean, I could do the same, right? I could make a NFT that points to some IPFS hash or URL or whatever. But what sets it apart is that the artist actually creates the NFT. So you have then the link cryptographically between the artist's public key and that they have actually put out they've signed it, they've published it, there's some connection which permanently links the NFT to the artist, which right. I think is fair enough. That's cool. That's fair enough. But I think it should take it to the next level and really actually store the data so that your ownership of the NFT is actually storing the file. I know that it's more expensive or whatever, but we're also talking about millions of dollars worth of art here, so maybe they can afford a bit of gas to properly store the file, at least.
Right. I mean, they don't have to store the file. The file can be encrypted somewhere, and the owner can download it. I don't think that storing the file is issue. The real value comes from the provenance, and the provenance is that the artist has created it, or whoever owns it has transferred the ownership to someone else, and the proof of that. The ownership and the entire chain of history of ownership from the artist to this is what the value is, right? So
I agree with you on that.
Yeah.
I agree with you, but I think that it would be way cooler because you're relying on the IPFS. Like, yeah, you can pin the file and persist it that way, but it's even better if you're going to put it on chain so that it's actually immutable and living on chain. Like, why rely on IPFS at all?
Totally agreed. And I think the what would be really cool is if only the owner is allowed to display the art. So for example, we have we work on this trading platform, and when you let's say you have this leaderboard, and imagine if if you're on the leaderboard, you can choose which NFT appears there, and only you can do it because you have the ownership of it. So something like that, I think, is going to happen eventually.
Oh yeah, no, I think that's a super cool idea, and that gets me to what you're showing on screen. I put this thread out there about my experience in digital items, which goes back to like 2014 when I was playing shitloads of Counter-Strike Global Offensive, which is produced by Valve on Steam. I'm not sure if you played it before, but it's a really cool first-person shooter where you basically play online together with a group of usually like 4 other people. You play like 5-on-5. It could be more than that as well. And it's really fun because it's very strategic. You have to work with other people, and it's fair because everybody, like, there's a whole economy with it where every time you spawn in the game, you get a certain amount of money. If you win, you make more money in the round. If you lose, you make less money. So then you can, buy more advanced weapons. And it really is like you're kind of like with other gamers, and you're sort of like strategizing about how to. It's basically terrorists versus counter-terrorists. And if you're on the terrorist team, you have to plant the bomb on their side. If you're on the counter-terrorist team, you have to prevent the terrorists from planting the bomb and try to defuse the bomb. So it's like they have this whole ornate sort of a video game item market where you can basically purchase these cases, which are like, think of it like magic cards pack or baseball card pack, where you purchase it and then you open it. But with the Counter-Strike, you get a case and then you have to buy a key, which costs like $2, and then you use the key to open the case and you get an item. And the rarest items, so some of them like the knives are the most popular, where you have like a 1 in 400 chance, so you have to buy 400 cases in order to get a knife. So this is how like they put a lot of thought into it, these guys from Valve who created the game. And so I at the time, it was like 7 years ago, I was spending quite a bit of time like of my daily life on this game, playing with friends, not super competitively, but we would play a lot. So really, when it came to, so when you're in the game, you can choose if you have a knife or if you have AK-47 or some other kind of weapon. If you have if you've purchased the, I guess what do you call it, like the ornate item or something like this. There you go, like that AK-47. So obviously you have to buy in the game the AK-47, but then you can display it like. From your inventory, you can then show that once you have it, you can display it. So I just started to basically get involved with this particular type called case hardened, which is, it basically takes your weapon and makes it gold and blue and purple. And within that pattern, there was also like 1,000 different types that you could have. So then there was all these rare patterns. Yeah, you're showing there like these like blue. They called them blue gems, and so people would basically go crazy about like, oh, look at like my knife has 90% blue. Oh, your knife only has 20% blue. That's lame. That's not worth it. And these things traded for like tens of thousands of dollars. And I feel like people, and it is very difficult for me to explain, but because I remember when these things came out with CS:GO, I was thinking these items are stupid. It doesn't give you any advantage in the game. It's purely just a visual thing and it's a flex thing. But it's actually like this particular something about this case hardened, this golden, blue, purple thing. Something about it was just really cool. Like I was spending maybe like 2 or 3 hours a day at least in the game, where I would be showing myself holding the knife, and I felt like it was just worth it to have like this cool, almost like jewelry in the game, just like if you were in person holding a watch or having a necklace or something like that. And feeling that value in digital life, which is just like what you were describing about, like if you're trading a lot and you're on the leadership on the leaderboard, then why not show something in your digital life, because that's where you're spending a lot of your time. Like that digital item has value, and that's really where it came from me. And it really seems silly, and a lot of people, like in the NFT trading community, they refer to the Patrick Bateman that scene from American Psycho, where the guys are showing the business cards to each other. I don't know if you're familiar with that scene.
Right, yes.
Yeah. Where they're like, oh my God, they're talking about like, oh, my card is eggshell white. And the other guy's like, oh, my card is bone white. And they're just like, it seems ridiculous. And I'm sure people hearing me talk about case hardened knives in CS:GO, they probably think, the fuck, this guy's crazy. It's just very similar sort of impact there, I think.
Right. I think the people who are not into the art world, they don't, maybe they're not familiar, but the utility of art is that it has no utility, that it's only for capturing your imagination, or it's for, as you said, it's for flex or whatever. So it doesn't really need to have a direct utility. In fact, the more utility it has, the less of art it is, right? So I'm not worried about something that I would actually prefer art that whose only utility is that you can display it, right? That should be the only thing. And when it comes to valuations, you probably heard of the 69 million sale through Christie's. What's your opinion on valuations of NFTs?
Yeah, I mean, so that's the thing. It's just art, and I think you hit on it right there. Like, if you don't understand NFTs and you say, oh, well, you could just copy paste it, and then what's the point in owning the digital one because you can copy paste it? That's just like saying, well, the Mona Lisa, I can just take a picture of it, or I can just order a print of it. So, why is the Mona Lisa worth anything like that? That doesn't make any sense. And then if you truly don't, I mean, most people don't understand art. You either sort of like are in the scene, or you're just confused by it all. And what you're showing here on the screen now, we heard about this, the Beeple 69 million Christie's auction, but a few years ago, November 13th, 2018, this painting also auctioned at Christie's in New York, $69 million. Now, what do you think this art represents? Like, what do you think this is, like a technically good art piece? Is this something you admire, or you think you would like hanging on your wall?
Art is very subjective, and I have liked art that no one else seems to get, and things that people like, I don't. So it's very, very subjective. It's entirely based on the liking is a different thing. But I think a lot of people who buy art, they have a sense of how the art is going to appreciate. Like they are into that market, and they know, this is like a upcoming artist. His art is selling for 1,000 now. It's going to sell for 50. It's going to sell for millions later. So most of the market is there. Actually, it's speculative.
Yeah, and it's hedge fund guys and private equity guys who are buying and selling them from each other. You can see I was just sort of before this looking at various different works of art that have been sold, and it's really just fucking rich guys that are selling back and forth to each other. Don't think that means necessarily that it's like a money laundering thing. I really think that it is just one of these like unique niche markets. And apparently this painting by Willem de Kooning, It apparently represents like a major change in the art world about the deconstruction of the female figure. The name of this painting is actually "Woman as Landscape." You can sort of kind of see the face and the hair and the arms, and I don't know. I'm no art critic. I don't know the
Yeah.
exact details about this, but apparently that's the value of it. Is that from this point on, the way that he deconstructed the female figure, that was the revolution that this represents. So.
Right. And one of the things about NFTs, I think, because they're on blockchain, they're kind of secure, right? The ownership and all of that is secure. Although we have seen that, this week there's been a couple of recent hacks. Maybe we can talk about, Cream and Pancake got hacked. Essentially, this is what the video looks like. When you went to the site, you got this pop-up, and a MetaMask window opens up. You see this kind of lazy. They haven't put like any title bar or anything like that. It's just an empty panel. It's just a panel with something that asks you for the seed. So I think,
but still nasty. You could imagine people falling for that. Look at that. It shows the icon.
Right.
It loads a little bit. It gives you a nice. What does the error message there say? Something about a hammer or something. Something that seems technical and believable, right?
Yeah. And most people are distracted. They're like chatting. They're watching some video, so they may not recognize. They may not pay 100% attention, and they, if they may end up putting the seed. I don't know how many actually fell for it. So when this happened, I quickly looked through they were claiming it's a DNS hijack. So I quickly looked at where the DNS is pointing to, and those were the IPs. And when I looked up the geo IPs of the geolocation, turned out it was, it's in San Francisco, and it's a Cloudflare. So the Cream and Pancake both hosted on Cloudflare, and the hijacker also hosted on Cloudflare. So Cloudflare, as you guys know, doesn't, you can, with a free account, you can get DNS support. So it doesn't mean anything. So anyone could have done it. And I saw that the IPs were changing and so on, and it moved from Cloudflare to Fastly. This was as I was doing it within like a few minutes. So what we saw, we had the postmortem from Cream. And what they essentially said, you can read it yourself, but essentially what they said is that their DNS provider, who was GoDaddy, their credentials there were stolen or somehow compromised. And the hackers changed the DNS to point to their servers. And when you change it, you can actually set a timeout. So typically the timeout is, like 30 minutes or 5 minutes or something like this. They had set it to a very long time. So what this meant was that anyone who loaded, Cream's page, they would cache that old entry, and that entry would just remain there until all the caches got updated. So which could be a while. And eventually, so these guys are still trying to investigate. They're not finished the investigation.
Sorry. How did this? So they did have a compromise on their DNS provider, like their own credentials were compromised, or was it something that was outside of their hands?
No, looks like they don't. They're saying they use Google single sign on. So there's no username or password associated with their account. So they don't actually know if they're they don't believe it's their credentials that are.
But it was GoDaddy. It looks like.
But it was GoDaddy, and they don't see any unusual activity. There is so somehow someone has either compromised GoDaddy itself, which is a very, very scary thought, because millions and millions of websites use GoDaddy, or somehow in their whatever scheme they're using, there is some sort of blind spot which has been taken advantage of, and they they're able to log in, change the IP address of the domain name, and they set out they put a long timeout so that everyone's cache still point to the old address. And I don't know. So they may have got some. There are people who will fall for it, as you said. It's even smart people have fallen for it. I know. IT engineers who have 10 years experience who have fallen for tricks like this. So it's
Yeah,
not
I mean,
about
all it
smart
takes. Yeah, all it really takes is like the right moment. Like you're just tired at night. Some like perfect storm of different things going on. Even the really really smart person can just click a link and not thinking. And that's why in crypto you gotta really really be careful.
Right.
But I'm curious if you. So let's assume that we were evil and we somehow were able to hijack the DNS of Cream or Pancake Swap. What would be the best way to actually try to steal money from users? Is it really just to put up a seed thing and hope that some people are gonna? Because I think the fact that you have to type in the seed in order for this scam to work, that's a pretty big friction. Like how many people are how many people actually remember their seed, or B, how many people really would be slipping up that much where they're like, oh, I have to go and input my whole seed in order to interact. I feel like there must be a better way to, like a smarter evil person could have probably stolen more money. Like, how would you go about doing that?
Right. So I think you could just so they know that they have a small window of time, okay, and they want to get the maximum amount of money. So if they get someone to type in their seed, even if it's fewer amount of people, they're likely to get everything this person owns, right? All their ether, all their tokens. I mean, every single thing. If they use the same seed for other blockchains, they got that money also. So in terms of payout, the seed is the biggest payout. Now, what they could have done is, some people argued that they could have just waited for this user to make a transaction and then show a different transaction and sign a different. That doesn't happen. So the reason is a person may never make a transaction, right? So you're going to get less money. You may never get money, and you know that there's a certain amount of window. There's the 1 hour, 2 hours. So what they did is the most optimum from a hacker's point of view. And as I said, I don't know how many they got, but I don't see from an efficiency viewpoint that what could have done better.
Yeah, I haven't actually seen any major reports from people that got money stolen. It's not like those Bitcoin giveaway hacks or Ethereum giveaway hacks where the address is posted and you can kind of get an idea of how much money people have accidentally or stupidly sent to the addresses. In this case, there has to be a victim, and they would have to sort of say something about how, admitting that they entered their seed and got the money stolen. But yeah, I was thinking along the lines of what you were just mentioning, like going even deeper and waiting for people to make a transaction and then maliciously getting them to send it to the attackers rather than sending it to the right Cream address. So,
switching topics now, did you hear about this whole REEF imbroglio, and what's your opinion about this?
Yeah, I mean, well, I guess just to give some background to people listening and watching, apparently there's this, and I wasn't aware of this REEF finance team before, but basically there's this multi-chain aggregator called REEF Finance, and Alameda, which is a OTC desk, but they also do sort of VC investing, and they also provide liquidity, of course, to FTX and a number of other exchanges. They approached the REEF Finance people to make a deal for an $80 million investment. And I guess what you're showing here on the screen, though, is the REEF Finance side of things. But basically, Alameda made a deal to do a 20% discount for a whole 80 million, or sorry, 60 million, not 80 million, I think it was. And they confirmed the first part of the deal 20 million. I think they sent 20 million USDC, and then at a 20% discount at the right price, the REEF team sent a chunk of it, because they, you could see in the Telegram logs. I'm not sure if you have them already available, but there's like Telegram logs that were posted that the Alameda team was showing, which showed that they confirmed the price, they confirmed the whole lot, and then you're confirming the. It's often that, like, if you and me say, hey, let's do a deal for $8 million in Bitcoin, and we'll do it in 2 million chunks. So we agree on the price, we agree on the amount, and then we settle in chunks, just because you're dealing with a lot of money. You want to sort of like be extra careful about things. So what happened was that after that first chunk, the REEF finance team started to get, I guess, a bit cheeky, and was saying, you know what, actually, we don't think we want to get the rest of the deal done. We noticed that apparently Alameda, this is Refinance saying this, but they were saying, like, we noticed that Alameda sent coins, the REEF tokens, to Binance, right? And then they were starting to say, like, hey, you guys are supposed to be a long-term investor. I don't think we want to finish doing this deal if you guys aren't holding up your end of the bargain to be a long-term investor. Like, why are you sending coins to Binance? And then the whole deal fell apart. There were sort of like, threats going back and forth, and they didn't complete the deal. After all, they started to smear each other in public, and FTX did something that surprised me. They were sort of like calling REEF a rug pull, which is a pretty serious thing to say. They were like going to delist them. I don't think there's any indication that REEF finances, like, and I don't know much about the project, but I don't think they're like a rug pull. I think that they just, they were doing that because a deal went wrong between Alameda and REEF, which is not, that's not really something that FTX should be doing. And they deleted the tweet, because that is out of character, I would say, for FTX, because I'm a big supporter of the team there. I think they're great hustlers. They've done, in a positive way, like they're out there building great stuff in the market and doing really good things. So I thought that was pretty out of character. But so I guess I would say that just because they sent them to Binance, first of all, it doesn't give, I think, REEF finance the ability to just cut the deal off, even if it's potentially a breach of, or it appears to be a breach of trust if Alameda is sending it to Binance. But I think that's part of what Alameda does. They're providing liquidity. They're sending it to Binance. When you're providing liquidity, you need to have sell liquidity and buy liquidity. So, I don't think. I think that the REEF team probably misunderstood it and thought that these guys are just dumping everything. They got it at a 20% discount, and now they're just dumping it to make a quick few million. Because there was no no lockup on the tokens, right? They were just available right away, and it was kind of like a gentleman's agreement. So that's sort of how I look at this situation. I'm not sure if you have any other.
Right. I think that I think maybe the lawyers are to blame for all this, because these are the kind of things that need to be thoroughly outlined in the contract, and the holding periods, and even if it's not enforced by blockchain, if it's not in the written agreement, then it doesn't exist. So if there's no holding period in the written agreement, there is no holding period. That's basically it. So if there was a gentleman's agreement, is there a reason it wouldn't be, they couldn't put it on the contract? That's one question, right? The second, I think, is the communication between the two teams. Generally, when something big happens like this, like you're going to sell something on another exchange, which something you just received as a long term, it is good to advise the other party that, hey, we received 20 million tokens from you. We're going to sell, 1 million, whatever the amount is. That kind of communication would have probably avoided any misunderstanding, right? And the last is, I think this whole threat business is counterproductive for FTX itself. Now, when if you feel that you've been wrong, you just take a you take legal action. You don't threaten legal action. When you threaten it, you give away your hand that you already are in a weak position, right? So anyway, I think it's just bad contracts and bad communication, basically the main mistakes, and then it just escalated from there.
Yeah, I agree with those 2 points. I mean, in the course of my career, I've made lots of gentlemen's agreements and written agreements. I have to say that it feels nice when you can just trust someone on a level where you have the right understandings on both sides, and you can just sort of by a handshake or just an agreement casually. It's nice to be able to have relationships like that, and so I can see the appeal of why these guys didn't want to get it in writing. There's kind of like a good feeling that you just sort of like, yeah, I trust these guys. We can make a quick sort of like casual agreement without, because it's nasty to get lawyers involved. It feels like sometimes, even though it prevents exactly this situation as you suggest. And Max Boonen from B2C2, he actually had similar comments on that point, right? That like this is very unprofessional. I'm not sure if you use those exact words, but basically that there should have been contracts involved here, especially with that sum of money.
Right.
And you might recall that he won a legal fight that went all the way to the Singapore Supreme Court, which involved what was that the exchange called Coin, Quoine, Coin, which is one of the stupidest names in crypto. But they apparently had like some kind of market maker API fuck up where they sold ETH at some ridiculous price, which B2C2 bought, and the sale was meant to be final. And anyway, so Max has a bit of experience in this stuff, and he basically just said like that has to be, you have to have written agreements. That's really what holds up in court in the end. So yeah, I mean we'll see. I was a bit disappointed in FTX, partly because of how aggressive they started to get in public, using both FTX. So Alameda was using FTX to sort of like strong arm and really like fighting in a very strange way, which was out of character in my opinion. And I'm not sure really what it ended up like, whether they're actually sending legal letters and they're going to threaten more lawsuits or what the deal is. But I know that they didn't complete. They only did the first sort of tranche, right? They didn't complete the whole deal. So.
Yeah. Okay, I think that's all the topics we have. To close, do you want to predict where the market is going? So this was my prediction from last week. There was some questions whether this is going to be a double top, whether we're going to crash, and because this is like a three push to the top.
And what was the prediction from then?
And my prediction was that it would not go down; it would continue to go up. It's still very strong because on the weekly, this is the first real big bar down with the close below the previous bar. So if you see here and all, it doesn't happen. So this is the first one. Usually the first deep pullback is a buy signal. It's almost universally a buy signal, no matter what your no matter what your system is. A first deep pullback. So if you look at all the way up here, this is the first deep pullback. It's a universal law in most trading systems that you have to buy, and it will continue to go up at least to the extent of the pullback. So we have here what 57 something thousand and 45, so that is 55, 57. So it's about 12,000. So you should expect another 12,000 up. Of course, anything can happen in the market. And this is not financial advice, but roughly what's 12,000 above 57? It's 69.
That's a perfect level to hit. The meme level of 69K. I'm totally with that. I think ETH also is in full price discovery mode, right? All it has to do really is make a firm break above 2K, and before you know it, we're at like 2,500. I think both we're just we're in uncharted territory, and as long as we're in this huge bullish cycle, and we talked about like the qualitative factors with institutional investments into crypto, and then also we didn't talk much about retail. Like holy shit, you can see with Doge, you can see the other it's the entire market that we've got clear, and then we haven't even yet talked about like the Fed and the macro effects that are like there's so much bullish stuff that's contributing to this trend that we're seeing on the charts. So yeah, I think both Bitcoin and ETH we're going to make new highs, new levels, and this is going to be super bullish for all of crypto.
Right, and we will revisit this, prediction next week. See if it's still bullish, if it's, how it will, how well we can predict the market. So in a bull market, it's fairly easy. You just say up, 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 and you are right more than you're wrong. The trick is to know when the market turns, right? And if it's overheating, it's slightly easier. If it's weakening slowly, and then it's on a longer time scale. So most traders their brains are calibrated to be very sensitive. So they are unable to see things that are playing out over a longer time frame. So which is why I always make sure that I look at weekly and monthly charts, so that it kind of compresses the space into 1 or 2 bars, so I can use the the sensitive trader's eye to catch these things.
Yeah, I was going to say if you change to the monthly, it looks less parabolic, but the way it's currently looking.
Yeah, this is monthly. Actually, this is still. This is a little bit scary as well, but I will not comment on this till the bar closes, which is in another 10 days. So you don't want. You don't want. What you don't want is you don't want a large tail, and the next bar closes right above the tail, and nothing else about that. So essentially, that for a lot of people, that's a sell signal. So essentially, for a lot of people, this bar is a range, and a close above the range is a sell. So I don't think that's what will happen, because we have 10 more days. This may continue to go up, a lot more. So for example, here there was let me just clean this graph here. So here, for example, there was this nice wick here, but this other bar closed well above it, and it went well above it. So this is it's not a danger of being sold. So here we are kind of close. Ideally, we would go all the way to 69, and so you're right. On a much longer time frame, this actually doesn't look that bad. This just looks like a similar breakout to this. It's just breaking out here. Now hopefully it will not do this. I
mean, it's honestly, it wouldn't even be that bad of a thing. And like, who cares? Like, it's okay to have bear markets for a few years. Like, it makes us stronger for this kind of move that we're experiencing right now. I mean, it's not the end of the world. And the whole thing is that we have all of these financial products now, options and futures, that help to protect against the downside. We can buy insurance in the form of put options. We can short on futures and earn more crypto to cover ourselves. Like, we have a nice liquid, huge market that we can balance our risk on. So
right. And I'm sure there are some people who made a lot of money. As when you start out, you want exposure to the market, you want to grow your wealth, but after a certain point, you have to slowly switch to preserving your wealth, because you will, it's one thing to grow from 10,000 to a million, but it's another thing to go from 1 million to 10,000. It's a lot worse. The write down is a lot worse emotionally. So, as Swapman said, use options, futures, and other instruments to hedge your downside risk.
But not yet, because we're still bullish.
Yes.
In my opinion, this isn't financial advice. Right. But but when the time is right, that's I mean, I'm not of the opinion that we need to have some like special sustainable move up that's going to somehow make us last much longer. I mean, I think it's totally fine to have this. Bitcoin's very emotional. It's very cyclical. It's okay for us to just get as unreasonably high in the price, and then just have like a long cooling period for a couple of years, and then during those periods, as you know, Brad, a lot of building happens. Like, a lot of character gets built in those years. People just focus on
and people understand what's important, what is real, and what is froth. and you
Yeah.
discard the froth, the fly by night teams will disappear. So yeah, bear markets are very healthy, that's for sure.
Yeah.
Um,
So I mean, because we see it right now. Like I mean, there's a lot of thankfully there's a lot of builders going on in this bull market right now. But then you also just have this ridiculous food tokens and stuff that isn't adding really anything in terms of like real technology being built where we can actually like have better UX and all this kind of stuff. So it often takes a proper bear market to slap people back into reality, stop goofing around and just making focusing only on making money, but also to remember like what the hell we're even doing in crypto. And so I'm a fan of bear markets, just not yet.
right. Yeah, makes sense. So I think that's a wrap for today, and let's revisit this market again next week, and then we'll see how it goes. Thank you,
Awesome.
Swapman.
Cheers.